Good morning, good afternoon, ladies and gentlemen. We're going to start in about 1 or 2 minutes. We're just waiting for people to get into the room. Thank you. Okay, good morning, good afternoon, depending on which part of the world you are. Welcome to the FMI broadcast. This is the session 2. We'd like to welcome you all to this series of FMI broadcasts. And today we're going to have John Jackson and James Southgate. But first, let me tell you a little bit about the agenda that we're going to have today. First, we're going to have some housekeeping and introductions. Afterwards, we're going to have our discussion about the RTGS CHAPS Renewal Program with John Jackson, Policy and Product Lead of the RTGS Renewal Program of Bank of England, and James Southgate, Senior Manager RTGS Renewal Program from Bank of England too. Afterwards, at the end, in the last 15 or 10 minutes, we're going to have an open session of question and answers. So please ask any questions using the Q&A widget at the bottom of your screen, or if you want, you can send them by email to the email that is on the screen now. So let me start a little bit with about FNA. FNA is a leader in advanced network analytics and simulation. FNA software is used to uncover hidden connections and anomalies in large, complex datasets, to predict the impact of stress events, and to optimally configure financial systems and infrastructures. FNA is trusted by the world's largest central banks, government authorities, commercial banks, and financial infrastructures. Today, I'm going to introduce you to our guests. We have John Jackson, Policy and Product Lead of the RTGS Renewal Program, Bank of England, and James Southgate, Senior Manager of the RTGS Renewal Program for Bank of England too. John played a key role in developing the blueprint for renewing the United Kingdom's RTGS service, and is responsible for policy and product development on the future shape of RTGS. James' responsibilities include implementing ISO 222 messaging in the RTGS system and the United Kingdom's high-value payment system, CHAPS. They also include his experience also includes designing improvements to the RTGS liquidity savings mechanism. So I would like to thank you for being here, James and John. Please feel welcome to our second session of the FMI's broadcast.
Thank you.
So before we start, I would like to introduce a little bit the subject. So perhaps one of the most important things to know is that as RTGS systems are the backbone of the payment system. They are the FMIs where the key payments settled. So the efficient and safe functioning of the RTGS is a necessary condition for the well-functioning of the economy. However, the payments landscape is rapidly evolving, so the RTGS system should evolve as well. Today, it's rather clear that faster, cheaper, more transparent and inclusive payments are beneficial for the public. So RTGS have to evolve to be able to cope with the new demands by new players entering the market and users looking for new and better ways to make payments. So this session, we're going to talk about how Bank of England envisions the RTGS system of the future. To this end, John and James are going to answer some questions that we have already prepared. And at the end, we're going to take some questions from the public as well. So John and James, for the third time, welcome. We're really happy to have you here.
Great, thanks.
So I don't know if you want to make any further introduction from yourselves to say anything that perhaps I have missed. So everything's complete then. So first question, and this question is directed to both of you, is what are the factors that have pushed forward the CHAPS renewal program?
Thanks, Carlos. I'll start off and talk about the kind of factors that were present in 2016, 2017 when we started this and we did the initial kind of user research phase and went to our kind of blueprint, and then hand over to James to talk about how that's evolved since. So we found ourselves at the start of 2016, the Bank of England having this RTGS system that had done great work for 20 years, was playing this really key role, as you say, at the centre of the financial system in the UK, settling CHAPS payments item by item, and then also providing settlement to a range of other financial market infrastructures, CREST, CLS, retail payment systems. And we kind of set ourselves this strategic question of, well, what's the future for this system? Should we be renewing it? If so, how should it change? That had been partly driven by there being kind of quite a significant outage of the system in 2014. It hadn't lasted the full day. It hadn't had any lasting problems, but I think it had really put it back on the strategic radar for the senior management, realizing the criticality of what we were running. And there'd been a report into that had said, okay, this system is perfectly serviceable. There are things you can do to address the particular reason that you have this problem, but you should be aware that technical debt builds up over time. You can't, these problems become more likely, in the preceding, as the systems get older. So then I think the important and far-sighted thing that the senior management of the bank did at that time was say, okay, if we're going to do this, this is going to be a major endeavor. Let's think very deeply about what change is going on around us and how we don't just refresh this system on new technology, but put it onto a footing that can mean it's fit for the next 20 years. And so we did quite an extensive user outreach kind of process where we tried to understand the key drivers of change. And I think that the thing that seems super obvious now and was becoming obvious then, but wasn't quite as obvious in early 2016, was just how profound the change that's going on in payments was and is. And when we went out to the users and asked what their needs were, there were many and varied, and there were the drivers for that, I think, still present today, but were real change, uptick in the diversity of the participants who wanted to take part. So new challenger banks coming along, new non-bank payment service providers, new types of financial market infrastructure being conceived of, and people thinking about building it on DLT. I think there was also very big focus. It was around the time of the Bank of Bangladesh kind of fallout, and there's a very big focus on security and resilience and new forms of threats. And it's not like any of that stuff's gone away either. And then I think there was also very much a sense of the importance of embracing new technology more broadly, and the potential that you could do a lot more with your RTGS system than you could have conceived of in the 1990s when we built it for the first time. So that's why the blueprint that we ended up with and published in mid-2017 was very much trying to go really beyond a technology refresh and tried to build a system that could promote access in a much more meaningful way, could broaden access out, and we've made some policy changes since to increase access, could really boost interoperability. There was a big push from our participants to make the system much more harmonized with how other systems were working, to bring it on to ISO 20022, things like that. And then try and build something that had a broader range of user functionality at the start. But then I think probably the most important ask of people was to say, build something that can continue to be flexible after you've built it. And that's actually why it's been a challenging build for us, because we're really trying to build it in a way that is future-proof, is flexible and modular, and we can operate it in a way that we can keep adjusting to change as it comes along. So that's a sort of sense of where we were in the first year and a half, and then over to James to bring you a bit present day.
Thank you, John.
So cool. It's fair to say that the landscape continues to evolve, and I think there's a few things that have probably piqued our interest more in the last few years, which fortunately are all in the direction of the way we're building this thing, but maybe has slightly changed the emphasis on which components will be more important. So I think when you looked at our original blueprint, we thought of a world where, obviously SWIFT is the backbone of cross-border payments, and actually there may be some kind of second SWIFT that comes along. Now, this won't be news to fintechs or anything like that, but I think the broader financial system is just about getting there, or starting to get there, that actually APIs are a highly efficient way of exchanging messages between each other, and actually potentially a more open network solution might be the way forward to connect with RTGS. So we will have an API solution there. It will be very basic at first, but we do see that potentially being built out to offer, going from early days of balance inquiries, potentially right through to the whole payment submission and kind of end-to-end management process. Something actually which has then been reflected by SWIFT in its own creation of its future transaction management platform. That really has APIs at the heart, in spite of it obviously supporting all the traditional messaging as well. So I think the way in which we communicate with the participants will continue to evolve. Also talking about options around, file-based contingency and the like. I think also we've thought more about the real benefits of moving to ISO 20022. We knew it was the way we'd have to go. And again, the fact that SWIFT are switching off MT messaging for payments in 2025 means we have to get off MT no matter what. But I think we've actually thought a lot more deeply about what benefit can ISO really bring us? What can we actually catalyze for the industry, for the good of the industry, by mass adoption of ISO 20022 across the different payment systems, and actually particularly for the UK, the fact that for the first time we will all be on the same messaging language across the wholesale and retail payment systems. At the moment, we've got 3 different languages for the legacy BACS clearinghouse, faster payments, and CHAPS. And actually that will bring an awful lot in terms of making processes more efficient for participants in the UK. They can have one single process that covers both retail and wholesale, rather than having to split it up different ways. But there are bigger benefits as well. I'm sure we'll kind of touch on those later. So I think that, those are 2 key ways it's evolved. I guess the other one is looking at things like, as they have in Australia, solutions like PEXA, where they can do kind of proper DVP essentially for assets that are not just, securities or equities. you can actually bring it kind of in a very useful way to end consumers, that kind of simultaneous cash movement and change of the electronic land registry. So that has real kind of risk reduction benefits and makes, you know, the end-to-end process smoother as well. Having something which could potentially support that, you know, via this synchronization module, as we're calling it, could really offer benefits. And, you know, that's not the only use case. I think there will plenty more will come about in the coming years.
That's great. I mean, we had a very interesting overview of what the renewal is. I would like to wrap up in like 9 words or expression that you used. First one is criticality of the system. The next 20 years of what we're expecting from the economy and the payments ecosystem. Then user outreach, because it's important to see or to know what the users of the system, the direct users of the system, are thinking of for the future. Obviously, innovation. I mean, how innovation is right now, but as I mentioned before, how it's going to be in the 20 years, which is a very difficult exercise. Also, security, resiliency, flexibility, modularity, the evolution of the communication with the participants, and something that James mentioned at the end, which is the mass adoption of the ISO 20022, which will put all the retail and the wholesale in the same language, with obvious gains in efficiency of the system. So this is a very nice summary of both your answers. Thank you for that. So the second one is also for you both. Do you think that these factors that you have discussed are exclusive to the United Kingdom case? If not, which I would say that that would be the case, does this mean that we should expect many renewal programs taking place in the near future?
Yes, so let me start again and say, yeah, definitely not. I think almost all of those factors are shared across any market. I would say our focus in the UK on promoting access is a bit specific to the UK. I don't think the focus on trying to expand to non-banks, I think that's an issue that everyone's going to have to tackle. But the push to increase our direct participation among financial institutions may be a bit more UK specific, because we started historically in a very highly tiered system. But beyond that, I think all the trends are pretty universal. I think it is right to expect quite a lot of renewal work on RTGS systems in the next few years. The one other thing I would say is just people are at different stages in their life cycle. So, you know, a number of people went before us and put in a second generation RTGS system a bit before we did, and that probably then changes a little bit your kind of viewpoint about whether you want to go and do something completely root and branch like we did, or, you know, in a number of countries, I think they've already built in more flexibility earlier, and then it will probably be more an incremental series of changes. And then I think the other thing to say just about the kind of timeline of when people are going to do things is that I think the other factor that's been weighing on a few of our central bank counterparts is their drive to sort of catalyze the move to instant payment systems in retail. And I think, you know, there's a number of countries where you'd say, yes, there probably is a little bit more active. They want to be on their RTGS system, but they might like to get this big project out of the way first. And I guess you could bundle CBDC into that as well, although that's much more nascent. I don't think that's yet hitting the same resources and the same demanding on the same people who would renew your RTGS system. But yeah. But so basic answer is yes, I think we can expect to see a number of other systems thinking about how to react to the same things, but they're sort of, there's a bit of path dependency about where they are and how to respond.
Thank you, John, for that. James.
Yeah, and I think actually if you think about the UK case as a whole, it's quite interesting. As John says, we're on a now quite a veteran RTGS system. Adding participants into CHAPS is incredibly cumbersome. It's basically a hard-coded change every time, and it takes an entire weekend to do it. That was clearly unsustainable in the way forward. I think others are not in such a bad situation. but I do think that actually it highlights that we had built up a bit of a technical deficit in the UK. And actually that was both in wholesale and retail payments. We introduced, or rather Pay UK or its predecessors introduced faster payments in 2009. That in turn has actually meant that Pay UK now is having to consider a new payments architecture. It was very successful. It continues to be very successful. There's over 10 million faster payments on an average day, and that's going up by roughly 25 to 30% a year. So actually they are going to have to build a new scale faster payment system for the future that has even less latency than the current system. So you know, I think some of those things are UK unique, but definitely the opportunities from ISO are truly global. And actually, I do think it's really important. And one of the things we will need to continue to do as a central bank is work with our colleagues, both at other central banks and at the commercial high value payment system operators like EBA or the clearinghouse, and retail systems, to work out how can we make sure that we really get those benefits, particularly in the cross-border space, making the end-to-end payment journey for cross-border that much smoother, that much more STP. And then how do we cater again, and this is something for everyone to consider, for various different flavors of model that are coming out for settlement. You know, those go all the way from the traditional kind of deferred net settlement that we do for the retail systems at the moment in RTGS, through to synchronization type solutions, through to kind of wholesale currency, digital currency type solutions, you know, and then potentially through to CBDC for the future.
That's really interesting. Once again, I'm going to try to connect the dots a little bit. From the things that you said, I would like to highlight promoting access, which you say it's rather characteristic for the UK, because it's a strongly tiered system. But you both agree on the instant or fast payments thing, that it will put a lot of pressure on the system. It will challenge the way that the architecture of the system has been designed several years ago. Also, that ISO 222 is a global trend. So this is like a factor that will push many RTGS systems to make a renewal. Also, the cross-border dimension that you, James, mentioned at the end, and also the new types of settlements that are coming our way and that will require a different architecture for the RTGS. So this is like my way of wrapping this up. So thank you both for this one. The third one is for John. Does the renewal program enhance the efficiency of the cross-border payments? We were talking about that 1 second ago.
Yeah, thanks. I think that the investment we're making in the system and its flexibility and its future capability is really puts us in a great position to start to pick up this really important G20 cross-border payments roadmap. If you look at that, that sets out this whole range of different building blocks and initiatives that are needed to address the fundamental frictions in cross-border payments. And there's a set of those building blocks around which relate most closely to operation of RTGS systems. So focus area C and D of the roadmap. And when you look across that, there's some really key things that what the investment we've made in RTGS will enable us to do. ISO has already mentioned, so I won't say a lot more about it, but ISO is a key building block, and a kind of global harmonized adoption of it is key for promoting faster, cheaper, more efficient cross-border payments. There's a report just come out from the CPMI's expansion working group, which I was a part of, and there's a few other members I can see on the call actually, which says very clearly, okay, we need to think across central banks and RTGS systems how we can extend and better align our operating hours. And that's absolutely something that would have been very hard to do in the old technology, in the old system, but we're building in that capability into the new one. That doesn't mean you just switch it on straight away. When we go live, we will be on the same settlement hours we are now, because you're trying to minimize risk on the cutover, but it's very much something we're consulting the industry about and wanting to set a roadmap to get to 24/7 and think about over what timeline that's feasible. Access is a really important part of the roadmap. We've already been able to make some changes there because there were some changes to let non-banks in, which we could do without technological change, but there's more we can look at there. And then there's quite a focus in the roadmap on things like PVP and interoperability between systems and APIs. And again, the work James has mentioned on API, the work he's mentioned on synchronization models on our Omnibus account, those are things that I think can address some of the needs that were already there domestically, but the cross-border payment roadmap hopefully drives demand faster, kind of increases the need to harmonize with other countries, increases the need to be flexible going forward. So it is a really important part of the proposition for us to be able to respond to international initiatives like that.
Thank you, Jen. It's very interesting because normally one would tend to think about the RTGS as a local solution for the payment system as a whole. But the thing is that right now, with all the demands by all the agents to be able to do fast, cheap, efficient payment systems, cross-border payments, it's most likely that the RTGS has to do something about it.
That's right. I think I know I'm overstaying my welcome here, but yeah, when we thought through this whole interoperability strand of the roadmap, you have to get yourself in this mindset of this is one node in a global network. And so as much as possible, a really important one for the country, but it's just one node in a global wholesale payments network. And you need to try and design it as such so that for all the participants who are in loads of those nodes, they're all as similar as possible.
I agree. So the next one for John as well, it's what is RTGS blueprint that you already mentioned it a couple of times, and what is the vision for the development of an RTGS service which is fit for the future looking at beyond 2024?
Yeah, so I shouldn't go into too much detail on this because we've already talked about it or alluded to it quite a few times, but the original blueprint as we set it out was this quite aspirational statement that said there's a set of capability improvements we want to make, but they're all pointing in one of these 5 directions, and often more than one, because these do overlap a bit. So really crucial was to make sure that any change we're making can at least keep still, but hopefully in lots of cases increase the resilience of the system. Lots of that comes by design and by moving to a modern, all the tool change you build in and the sort of security you build in, but also things where we think about having extra networks and better ways of testing change and things like that. So there's key push to say you always need to keep pushing the boundaries on resilience. Second is around access, and I think I've talked to that plenty, but it's just to say it's not just access for account holders, it's also access for new types of FMI. Interoperability is, again, the thing I was referring to about making this system interoperate with other key systems that our users want to use, and that's both domestically, like making the ISO standard for the wholesale and the retail systems more aligned through the common credit message, but internationally as well. The improved user functionalities, these things like operating hours, synchronization, APIs that just enable a more modern experience. And then finally, the strengthened end-to-end risk management was actually very specific to the UK and was about us bringing in elements of the CHAPS scheme that were still run by the private sector and bringing those in-house for risk, basically. So that's the blueprint now, and then maybe we've got a second slide which James can talk to about 5 years on. We've done another consultation picking back up on this and reflecting the fact that we're not trying to deliver every one of the elements that was under that blueprint in one go when we put our new core ledger live, but we actually want to keep moving, keep developing the system going forward. James.
Yeah. So yes, in this consultation document, which we launched about 4 weeks ago now and runs until the 30th of June, so there's still opportunity to comment on this. We've kind of put three groupings in. So the first one is about having other ways to connect to RTGS, and one of the key elements of this is potentially moving off the Y-copy service that we use under Swift. Y-copy is a very good concept from a security perspective because it effectively means that there are 3 parties who see any message, which therefore means that 2 parties can always tell if the third party has been compromised. So parties being Swift, us, and the participant on either the sending or receiving side. But actually, if we are going to move off that, we want to move to something which might allow direct connections between the bank and the participants, but is equally secure. So one of the things we're looking at is a kind of centralized identity service. And then, as talked about earlier, also enabling data transfers to and from RTGS via APIs, and be those account services or be those payments themselves. The other thing is then innovative and flexible services, and this goes to some of the stuff actually that's talked about in many of the cross-border CPMI building blocks. So synchronization, changing operating hours, finding new ways to generate intraday liquidity, potentially using other currencies, and harnessing the benefits of richer payments data from ISO 20022. And then the resilience element is both ensuring that the core system is more resilient than the present system, but then looking at the kind of options around an independent technology solution. We already have one called MERS, but again, that will need updating for the future. Better reconciliation of data, which is a key element of being able to detect even minor issues in the system or at participants, and also a potential contingency solution for bulk retail, urgent bulk retail payments like wages, salaries, benefits, and things like that. So those are the kind of the key 3 areas, and I would definitely encourage you to look. Easiest way is to Google for the roadmap for RTGS beyond 2024, but I think someone's going to post a link too.
Yeah, thank you, James. Thank you, John. I mean, the next one is going to James, and it's something that we have already talked about a little bit, which has to do with Swift. So today CHAPS uses Swift messaging service. Is this going to change, and why?
Yeah, so a point of clarity here. We do envisage ourselves moving off the Y-copy service in the longer run. That does not mean that we won't be based on Swift, or rather, it doesn't mean that we won't be using Swift. Swift has certainly among kind of Western countries such a dominant position in the cross-border market, the correspondent market. I'd find it very hard to believe that our participants would tell us that they didn't want to connect via Swift anymore. But it is about offering other options, and particularly, for those who aren't in that market, the kind of cross-border correspondent market, or are bringing new business models into the payments world, Swift isn't a foregone conclusion for them. And actually, it does cost a fair bit of money to join Swift. There is a fair bit of kit involved and the like, although Swift is kind of gradually shifting business model as well. But actually, I think it will be more and more important for us to offer the other routes, be that some kind of file-based contingency, be that APIs, and even things like a better UI, which will be one of our key deliverables, is really important for people being able to tweak parameters, around how they use their account, obtain information, and ultimately make payments as well. So I think it will be still a lot of messages will be exchanged over SWIFT, but it won't be the only channel anymore.
That's a great answer, James. So I would like just to highlight two things, which is redundancy. I mean, to be able to have some backup plan for SWIFT for some reason, and diversity of access, diversity of financial institutions, and also of communication services to have access to the RTGS. So those are the two things that I would like to highlight from what you just said. Thank you, James. For John now, and this is a very typical type of question nowadays, is the new RTGS built on DLT, distributed ledger technology?
No, it isn't. But we did think about that question seriously in 2016, 2017, did a very early simple proof of concept, which I think told us something that's been borne out over time, which was just saying, this is a really interesting technology. It's not that you can't build a payment system in it, but it's not what you would, it wasn't at the level of maturity that you would build a critical national infrastructure on at that point. And even now, I think, and there were also the sort of privacy data sharing kind of topics that would have had to be really worked through and would need some really fundamental design thinking to do. So very much have been comfortable building this in more proven existing centralized database technologies, but it's really important that we build it in a way that it doesn't that it's fully able to interface with a DLT infrastructure in the same way it would be as a centralized infrastructure. I mean, and actually, although on the surface that looks like a bit of a contradiction, and surely if this thing over here is done in this way, you're going to have to do your thing in that way as well. I think there's loads of experience shows that RTGS systems are capable of interfacing with a whole wide range of different infrastructures already, and you don't need to tokenize your entire ledger for it to be able to offer some kind of form of tokenized settlement, and that's what that synchronized thing that James is talking about kind of does. It takes money held in an account, then it will allow you to kind of take a amount of it, kind of commit it to settlement, wait for commitments to happen in other ledgers, and then once all those commitments have been made, then settle. And that is just like kind of creating a short-lived settlement token that can support settlement, across a ledger that's, working across, multiple ledgers, or an infrastructure working across multiple ledgers. So we're very committed to making sure that we don't put any barriers in the way of people building infrastructures on new tech or old tech, or however they build them. That's one of the things that came out since we wrote the blueprint, is that we have expanded the range of settlement models we offer. We've incorporated this omnibus account feature. It's not a new idea. It's not our original idea. It's already the way, for example, CHAPS settles in the Fedwire system, or Euro 1 settles in Target 2. But that is a sort of sign of our commitment to try and bring new settlement models on where it's demanded, and we're expecting Finality, who are building their system on DLT rails, to be able to kind of onboard onto that omnibus account, once all the onboarding process is finished, and it will over time be open to other infrastructures as well.
That's great, John. Thank you. I would like to once again, to wrap it up, I would say, I would put a term that I like, is that the RTGS is technology agnostic, in the sense that whichever participant, the participant, if it wants DLT, legacy register system, it doesn't matter. It will be able to communicate efficiently. It will be able to work with the RTGS. Nevertheless, the RTGS system is based on centralized, central bank, proven centralized type of ledger. So that's the way I would like to wrap it up.
Yeah, and actually your summary was really nice, because it tied together mine and James's question as well, in a way, because that's what James is saying as well, is saying it's not that we're purely technology agnostic now. We're not, because you need to have SWIFT for now, but it's all trying to move in that direction. it's easier to move in that direction to provide for infrastructures than it is for intermediaries at the moment. But yeah, you've got it. Thanks.
Thank you. So the next one, James, and this is something that we already have talked a couple of minutes ago, is CHAPS is well known for its tiered access scheme. Today, a subset of banking institutions, some non-bank payment system providers and FMIs hold accounts in the RTGS. Is the renewal going to change this tiered access, and why?
Thanks. So I think the answer to this is yes and no. So we do have a very highly tiered system at the moment. 37 direct participants compared with, well, Target 2 must be around 1,000 and Fedwire even more. Actually, we have about 200 participants in RTGS, so quite a lot of smaller banks hold reserves accounts. But actually, the step from just having an account in RTGS to participating in CHAPS is significant at the moment. And there's two elements to that. One, the extra infrastructure and the operating requirements are quite cumbersome. So as I say, every time we onboard a new member at the moment into CHAPS, it's basically a weekend's worth of work, and that involves the other direct participants as well. Now, that's actually quite an overhead if you're having to bring your staff in every few weekends. That will all go. So that should make things significantly easier. And then also having other channels could also, again, help lower the barriers to entry, although actually most of the reserves account holders will have SWIFT in some form or other already. So I do expect that we will see more people seeking to join CHAPS. And actually, one of the things we've been doing alongside the technology part of things is also making the rule book simpler and kind of tiering the requirements. So if you are a smaller participant, actually now only a subset of requirements apply for certain elements of the rule book. So again, making it kind of proportionate to their impact on the financial system. The no is that we are still going to have, even if we have a couple of hundred participants in CHAPS, clearly there are still going to be thousands of indirects, particularly, those based in other countries, for whom the business model won't work, because ultimately what they probably need is correspondent banking in multiple currencies. Joining CHAPS doesn't solve the problem for them, and their volumes will be just too low. There won't be enough business as usual value to replace that arrangement. So I think it will help reduce the barriers to entry, but we will still have a tiered model, just hopefully less tiered towards the bottom as such.
That's great, James. The yes and no answers are really interesting always, because you have like the both sides of the coin, right? The both faces of the coin. So thank you. The next one for both. What is the component of the renewal program that you expect the most from, and why? This is like a personal thing, because the renewal is like your kid. What do you expect from your kid? Brilliant.
I'll start on this one. I would normally at this point get up on my soapbox and start evangelizing about ISO 20022. You could argue it isn't our kid, because of course it's a global collaborative standard. And actually that's where the benefits lie. Probably what I am going to choose instead is something the team have been working on over the past few months, in fact with FNA. And it's a thing in the system called the liquidity savings mechanism. And essentially what this does is that it allows participants to net off, let's call it net off. The lawyers would tell me, no, it's simultaneous gross settlement, and that is important. But, effectively net off incoming payments. So you let the payments queue for a short time, and there's an algorithm effectively which matches them off against each other on either a bilateral or multilateral basis. The reason I mention this is we introduced the LSM in 2013, and it had quite significant benefits for participants in terms of reducing their liquidity requirement. that system is now quite old. We are technically restricted by RT1's technical constraints on how quickly we can process those payments. There are better algorithms that have since been written, and some of the work we've been doing with FNAs using their simulator in order to model the impact of a new algorithm and of having fewer technological restrictions. Those should bring further liquidity savings benefits. And why does liquidity savings matter? Well, ultimately, the participants have to pay for that liquidity. That is high quality liquid assets they can't use to count towards their capital or liquidity buffer. So actually, this will save them hard money. We're talking multi-million pounds a year, which actually is a direct financial benefit, which will offset the cost of help offset the costs of the program. And there aren't many things that you can point to nowadays where you go, yes, actually, this will save money on my bottom line. So yeah, for something different, the liquidity savings mechanism there.
Thank you, James. John.
Yeah, as you say, choosing between who's your favourite child is hard. But now James has got the FNA mentioned in there, so we'll be invited back again. Let me go to APIs, and I would say that although on the time we go live in 2024, I don't think the API will be a game changer for the system. I think it has the real potential long term to be a game changer, because I think it taps into this point that says data is the thing that's really underused and neglected in payments. It's this incredible data set of every economic transaction that happens in sterling, is flowing through the payment systems in the UK and ultimately RTGS. But that data is not currently easy to retrieve or use. Now we're making this big investment in structuring the data better and making it richer. But then I think the API layer is the way that you get it so that the data flows in and out between ourselves and our participants in this seamless, demand-driven way. And so I think long-term, being able to get into this virtuous development cycle, as you've seen happen in other markets, outside finance, but in other areas where APIs drive this, much better consumer experience, get much better data out to you, and then that builds upon itself and you get this virtuous cycle. I think that API technology that we're building in and will be a slow burn over time, but allied with the ISO, the richer and better structured data, I think that's the thing I can really see being transformational over the sort of 10, 15-year time horizon.
That's great, John. Thank you very much. We're running a little bit late, so for this last question, let's try to keep it very brief. Finally, for the public, and I mean consumers and merchants, how will the new CHAPS affect their life and business as usual? James.
Yeah, in some ways, hopefully not too much, because the key part is that a lot of this is happening in the background between their payment service providers. Actually, what it should really help is things like reducing fraud, better reconciliation for those banks, more information in payments mean payments are less likely to get held up or go missing, or there be some fraud issue. So it's actually about not only furthering quicker good outcomes, but avoiding those very occasional bad outcomes. There's an awful lot that will help them here, but actually for end firms as well, more information in the payment does help you kind of reconcile your books and the like. So, there's lots of subtle different ways, but avoiding the very bad outcomes is a particularly strong benefit.
That's great, James.
I'd add to that, I completely agree. And in some ways, the big long-term ambition would be that subtly the changes we're making here lead to a more competitive, open, diverse financial system. Nobody will ever be able to go back to that and say, oh, that was thanks purely to RTGS, and it won't be thanks purely to RTGS. But if we can play a part in that, that has massive societal benefits.
That's great, John. Thank you for keeping it that short, but that interesting. So now we have 9 minutes for Q&As, and there are several which have to do with one topic, which is CBDC. So we're in the intersection of FMIs and CBDC. At the end, the central bank is the largest or the most critical FMI. So there are two of them that I would like to bring now, which is, the first one is CHAPS as steps for Bank of England to get its CBDC?
Yeah. So let me start by saying I'm biased. So not necessarily saying this is the opinion ever in the Bank of England, but RTGS is a CBDC, has been for 25 years. And I think from the perspective of, I see CHAPS as being this, and RTGS being this kind of serve the whole market CBDC that can both allow settlement for retail systems and individual wholesale transactions as well. And CBDC, in a way, from that perspective, is just another interesting retail payment system development, potentially, if we talk about retail CBDC. And then from wholesale CBDC, I think we are, so we can enable, you know, if a retail CBDC in the UK comes along, we can enable that to link to all the other system, you know, that the money used in that to link to the money used in all the other systems through our ledger. Wholesale CBDC, we're very much thinking about how we augment RTGS to bring it closer to people's concept of what is needed in wholesale settlement. So it's focusing on interfaces, focusing on access, focusing on connectivity. So I think it is a step, it is a CBDC, it's a step to enhancing this CBDC, and if someone does something very specific in retail, like cash replacement type thing, it can facilitate that as well.
That's a very, very interesting answer, because in fact, you already answered some others that were about if having this renewal and making having the RTGS system more easily accessible to other types of financial institutions, if there is a case still for a wholesale CBDC, because as you mentioned, we already had a CBDC before, but it's restricted one.
Yeah, and what I would say is, I think the jury's still out and it will take time to decide. We think you can achieve everything people want to achieve through that in terms of unleashing private sector innovation through augmenting your RTGS, but time will tell. You know, that depends on us being right, that we can facilitate all the sophisticated forms of central bank money settlement people want to do without creating a separate ledger for wholesale CBDC. We think we can do it on this ledger. We keep working with the prospective FMIs to see whether there's any of their needs we can't meet through the ledger, in which case we'd have to look at building something separate.
Thank you, John. I have another one, which is a very interesting one, I think. Is there any impact of the recent trends to go to T+0 security settlement?
Interesting. I mean, we do get a little bit of T+0 security settlement. So, you know, there are same day gilt transactions. We lend stuff out of our QE portfolio to the DMO on an intraday basis, so they can deal with any shortages in the market. To go to a T+0 generally would be quite a big move. That said, it does potentially, again, RTGS renewal is helping here, because at the moment we have a very bespoke DVP link with Crest. That has its benefits, but the important thing it doesn't do is allow other people to come in. So we don't, for instance, have a direct link with ICSDs or things like that, you know, may want to offer new services or a new CSD. So I think we are, you know, it's one of those things that John mentioned, is probably where RTGS renewal will help, but it probably wouldn't be the single driver of the solution or the single part of the solution, if you saw what I mean. But, you know, T+0 security settlement can happen, but obviously everything kind of tends to need to be lined up. But it could happen, I think, yeah.
Thank you, James. Next one, do you see crypto and stablecoin exchanges interconnecting to CHAPS? That's a nice one, right?
Yeah, I'd start with that and say, first of all, I'd see it more as RTGS than CHAPS. RTGS we're using as the term for the overall system, and then CHAPS being one payment scheme that uses it, that sends the individual Swift messages at the moment. I think that from a stablecoin perspective, I think that in a way I would see that as similar to, can we offer connectivity to other market infrastructures? So the live question at the moment is more like, what are the supervisory rules around these stable coins, and is there a set of supervisory rules which would enable them to have the supervisory status in which they would sort of be eligible for central bank money settlement, and in which case, to us, in a way, it's just another infrastructure coming along. We see whether the omnibus account is the right way, or whether whether synchronization is, or whatever. So I think what I would say there is, in a way, the innovation starts on the regulatory side and working out the kind of safe umbrella to put around it, and then if there's then a really good question about settling instant, being able to on-ramp and off-ramp or settling central bank money, that's there. With crypto, I think it's harder to imagine the use case, I think. But in principle, we're trying to open up to providers who do DVP. Sorry, I've got a phone going on behind me here. Who provide DVP with other assets. If there was a reason why people wanted to settle a particular crypto asset against sterling, and an FMI came along and offered that, they could, that in theory can happen if there's demand for it and there's a good risk reason to make it happen. So no current plans, but no obvious prohibition, as long as we can meet all the regulatory and technical operational issues, and there's an FMI willing to do that. There isn't a plan to connect RTGS directly into crypto in any way. It would come through an infrastructure.
Thank you, John. Perhaps the last one that we will be able to address is the next one. Is CHAPS going to be available 24/7? What are the risks there?
Yeah, it's a good question. It's something we are actively thinking about, and that's actually one of the elements of our consultation is extending operating hours. We say in RTGS, but ultimately CHAPS, I think, would be a key element of that. I think in the long term, we will be 24/7, yes. You're right that there are risks with that. People need to have appropriate 24/7 fraud controls, AML exceptions, all that kind of stuff. But, that is doable. We have 24/7 faster payments. We've had them in the UK for 13 years now. So it's not exactly cutting edge, but there will need to be a lot of investment made. So it may not be the first step that we move to. We might move to, 22/5 or maybe 22/6 even. Going certainly 24/7 or near 24/7 is quite a step actually in investment for the direct participants, more so than us actually. But yes, I think in the long term we will have 24/7.
So we're we just finished the time that we had for today. Thank you very much, James and John, for this illuminating, productive, and very friendly talk about what the CHAPS Renewal Program is about. Thank you very much once again for being here, and to everyone who attended today, thank you for being here. We will be very happy to join you once again in our CBDC broadcast number 6 next month, and also in the FMI broadcast number 3 also at the end of next month. So thank you, John and James. Thank you to all the attendants. Have a nice day, all of you.
Thanks.
Thank you.